today. I think it's about time, 11 o'clock, we'll get going. Today is financing tips for real estate pros. We've got a lot of experts up on the panel here, and we're going to try to give you some tips for working with your mortgage brokers and getting some properties financed and making yourself look good in front of the asset managers or the portfolio or the REO owners, and help you grow your business. My name is J Crippen. I'm the moderator. I work for In-Ocean Enterprises. I'm the director of business development for them. In my role, I basically manage the investments for the company, and we invest in many different products across many different industries. Related to this panel, we invested in a mortgage bank called Sagamore Home Mortgage. We were the fastest growing mortgage bank in the Midwest last year, and we actually invested with them to help them grow throughout the United States. We have unique products and services specifically designed for REO brokers for them to grow their business and assist them with marketing their listings and managing their clients. And our representative here is Chris Bryan, the tall guy in the front of the camera, by the way. I'll be happy to talk to you. So we'll go down the panel and introduce everybody. And if you guys want to go over a little bit about your bio, who you are, and why you're up here, we'll get going.
My name is Justin Wenk. I'm from BSI Financial Services. We are a boutique servicer out of Titusville, Pennsylvania. Again, my name is Justin Wenk. And we are a boutique servicer, and we're actually involved with the assets from beginning to very end, regardless of the stage that it's in a loan or REO. We know our assets very well, and so the primary value that we bring to the loan officers, as well as the real estate agents, is we enter into transactions that we feel confident that have the ability to close, and not a transaction that has the ability to fall apart.
I got a question for you, Justin. So how do you know if it has the ability to close?
So one of the things that we look at is if a property is FHA financeable in its current condition, if we're willing to make the repairs or not to make it FHA financeable. That allows us to make the right decision. If we receive an offer that FHA financing, we may not accept it, or we may require that the buyer is willing to make the repairs necessary to get it to the level to get it through the financing.
Oh, okay.
So that's one of the very simple things that we do going on very early.
I'll wait for you guys to get through. Yes.
How do you ask your agent to list the property with that knowledge? So we are very detailed in what we put on our BPO, stating it needs a new roof, it needs whatever, an oven, or so. How do you?
Do me one favor. I kind of set the precedent wrong. How about we get through the introductions and I won't ask any more questions, and then we'll start with you. Now, I like the questions. We want this to benefit you from our expert panel. So ask away as we're going on, and I'll recognize you and I'll repeat your question. All right. So we'll get through the introductions. We'll go. Thank you for answering.
Thank you.
Go out of turn, by the way. That was interesting.
Okay.
Great job.
Good morning. Oh, come on. We can
Morning.
do better. Thank you. My name is Mike Prewett. I'm the broker-owner of Southern REO Associates in Atlanta, Georgia. We're a residential real estate company that's specialized in the management and sale of lender-owned assets for the past 25 years. Last year, we closed in excess of 1,300 REO transactions in the Atlanta region. And I hope that we can get to your questions this morning. Thank you.
Matt Ritchie, I'm with GMAC Mortgage. I wear a few hats. Main thing I focus on is the GMAC financing, the recapture of our REO properties, and the liaison back to our mortgage company. Signing LOs, working with the agents, getting you guys in tune with what our expectations are. I also run the vendor management, so it kind of goes right in line with that. And I run our rehab and repairs, setting up, making sure we're preparing properties up front so we can obtain financing on it.
Good morning. My name is Justin Ireland. I'm with Wells Fargo Home Mortgage. I'm a market growth and development manager for the renovation product in the Western United States. It's nice to be on a panel with another Justin. This is the first time this has ever happened.
Is it?
At my age.
I think this is the first time I haven't had another Chris on there.
There you go.
So, okay, so what was your question? Your question was about?
Oh, okay. So Wells Fargo is I work for, but anyway, the situation is they want us to market it on the MLS for everything. We'll take all loans, right?
Right.
But so, but however, FHA, they're going to come back at So do you still, would you still put FHA on there knowing that you have these situations on the MLS?
So we would elect to not offer that financing on the MLS. However, it would probably only reduce the number of those offers by probably 25%. You would still see them.
So you would elect not to, that you would put
We
cash or
work-
FHA
yeah.
203K?
Well,
So we're very proactive from the very beginning of the transaction, both with the homeowners, with the realtors, if it's REO, with the asset itself. So we make those decisions going in, and we have all the information that we need based on the level of the offer to make a business decision quickly. If going in eyes wide open, we need to, that we're willing to undertake that expense in order to close on that offer.
So you would tell the agent what box you would want checked?
Absolutely.
Well, I have a question. So it would go FHA. Go ahead, sorry.
So let me just give a little different perspective on that. So first and foremost, I think it's critically important that the lender or the lender's group that handles this, that you're involved with them early and having those discussions. Because to your point, clearly if it's a health and safety issue, buyer's probably not going to come in prior to close and fix that. So we've got a catch-22 there. So that's a discussion that we need to have early on together. But we also have to remember, and so like I will say, like renovation products, you can do that type of product unless we run into a health and safety. So what may appear initially that, no, we can't do that, we might be able to depending on the product. So I think it comes back to communication. We have to communicate with one another, whoever is handling that, the assets manager or whoever is handling that, have that conversation, because clearly it makes no sense to take an FHA offer on a property that will never ever go there.
I totally agree with you. That's why I brought it up. I stirred the pot. Because I like to check the box cash always.
Right.
And because my properties are all kind of, I'm in the foothills, so septics and, wells and, bears and, the whole bit. Bad roofs.
Right.
Old. Okay. So, but FHA 203K, I like to check that box.
Right.
But, I think there's a little confusion out there where, that we need to market to everybody. And I'm going, okay, well, who's going to pay for this? I'm thinking. But I'll go ahead and check all the boxes, So, I don't know. I'm finding out a little clarity on that.
Let me add on to that real quick. The main thing we're focused on is exactly what you're talking about with our asset managers right now, especially with our LOs. So we involve our LOs very early on in the process. They're assigned a listing agent in retail areas, okay? Them walking the property, very beginning, when they're doing the BPO, knowing what type of financing the property can obtain, okay? The property comes into the asset manager, they get the BPO, they collect everything and set their strategy right then. Are they going to repair the property, which we're pushing towards a lot. We're seeing the ROIs, we're seeing it turning into a buyer, owner-occupant market, and by not repairing the properties up front, we're just having the appraisers punch our house, increasing our escrow timelines, not making the customer happy at the end of the day, your customer and my customer on the mortgage side. Working with your asset manager, so if you go down a path and decide, hey, we're not going to repair this and I didn't check the box FHA, okay? A lot of times we get offers in and the asset manager, we decide to go with it. Now you're trying to get the house in a condition to work for the mortgage, where in the very beginning, I would like the house to be, these are the products that the house can receive instead of the other way of coming from the other end, okay?
Yes.
But if you're going to take an offer or accept an FHA offer on a property that's not going to obtain financing, setting correct expectations up front with your asset manager is the #1 key I see. Not putting it at 30 days and just so they'll accept it and it's in the month of June when they know that the numbers aren't going to hit. Go ahead and set up front. We need 45 days. We're going to have an appraiser back out after we make the repairs. Everything's going to have to go back to the mortgage company, and you are guiding it through that process. I guarantee if you set that precedent up front with your asset managers, you'll be so much happier. Okay?
Yeah, I do. But yeah, I understand because I don't want to prolong the escrow, and I see it. So, I just think that it's very important up front, and that is known. So when I see sometimes I might have to check a few extra boxes when I know it's not going to work, then when somebody's going to give me the offer, I say, absolutely, you can give me any offer you want, I'll submit it. I don't care if you want to trade tennis shoes for the house, I'm still going to submit it. And but here's the situation with the house, just to let you know, talk to your lender, so you don't set your
between a good agent and a bad agent is controlling that process. Most agents just throw it up against the wall and see if it'll stick,
Yeah, no.
and figure it out at the very
My
end.
goal is to keep the buyer's agent happy and loving me, because they're always showing my houses. And my job is to keep the buyer's agent happy so that their buyers are happy. But if a buyer's agent isn't happy, then you got some unhappy buyers, because it just fizzles downhill. So, thank you for answering that.
Sure. I think that it's communication up front. So I was an asset manager at Fannie Mae, and then I ran the asset management disposition contract for the FDIC. And you know, an asset manager manages about, you know, it used to be 150 back in the day, but now it's 300 and sometimes 400 properties that they're managing. And a lot of real estate agents expect that the asset managers know what's going on with each and every one of their assets, which is completely impossible. So I think that the point is communication up front and managing expectations up front, and being clear on what those expectations are with your asset manager will go a lot further than just trying to get a lot of offers, so that when I'm asking you how your offers are going, you know, you're just getting offers to submit offers. So it's communication and managing expectations, I think, is the key.
And I do that. I talk to my asset
Yeah.
managers at least 2 or 3 times a day.
Or you want to get properties, right?
Free, because I think that's a good way to have a problem in a relationship, and it saves a lot of time.
Right.
So I do that, but sometimes it's above the asset manager's head of that decision. You know, they
Right.
log in, I log in, and sometimes it's above their head of who wants what.
Right.
So you gotta just make everybody happy and do it, then I diffuse it at the spot.
Right.
But I say, give me your offer, I submit it anyway.
Right, you have to,
Yeah,
by law. Right?
yeah, yeah.
All right, you had another question? Go ahead.
Yeah, with all that being said, what is the future of FHA? I see that
Wow.
there's a secondary lender that we're talking to, a primary lender, 2 primary lenders, and one that is actually in the trenches. But isn't there a secondary form of loans that we can seek for our first-time buyers that we can enable, like neighborhood housing or anything like that, that you are more involved in or getting more involved in or would like to get involved in?
Well, go ahead.
So every community has their nonprofits out there. And I know that in a lot of my areas there is all kinds of special secondary financing. And the vast majority of it is through either the county, cities, and in conjunction with the nonprofits. And I would hope the lenders are aware of these programs and that they're available out there, so that we can tie them together with the primary financing. But I can tell you right now that there are just millions of dollars out there. There's over 1,200 programs right now that I have listed just in the West. So I will tell you, they're out there. Reach out to your nonprofits, the city and the county, and ask them what they have available for housing. I mean, every day there is a new program and another pool of money popping up everywhere. When people say that there's no such thing as no money down, I got to tell you today there are. Now, it's not like the good old days, but between FHA and down payment assistance programs, they are in every community that I'm aware of in this country today. And the money is not being used.
Absolutely. We'll talk a little bit, we don't want to talk too much about the future of the mortgage market. We were discussing a little bit earlier, but it's clear that the government wants out of the mortgage industry, guaranteeing they're making FHA more expensive. But that opens up the gap for the secondary market and other lenders like us to come in. The government has really occupied the sweet spot of the mortgage market for many years, forcing private companies to go to the margins and do riskier loans. So we'll start to see that shrink, the government's piece in it, and we'll see bigger players come back in. So to answer that. All right, any other questions, comments, complaints, concerns? Not yet? All right, moving on. All right, jokes? No. You want that? No. Okay, good. Keep it clean. So what I wanted to do next is, we'll talk a little bit about programs toward the end, but I kind of wanted to open up what we often see on the mortgage side of the business is that it's not the wrong program that causes the deal to fall apart. It's working with your mortgage professional and getting them involved in the process early or at the right time. And I wanted the panelists to kind of talk about working with your mortgage professional and maybe give you some tips, because I believe that working with your mortgage professional on what needs to be done with the property, with the borrower, and making sure that you understand what needs to be done with the mortgage is more important than choosing the right program. So who would like to start?
Start with the mortgage guy.
Yeah, probably start with the mortgage guy.
All right, start.
Start with the mortgage guy. Okay, so, you know, we really have a couple different paths we're going down here. And the first thing, and I've already heard it from the panel twice up here, get your loan officer involved when you first get the house. Walk the house with that loan officer. I know that with the company I'm with, we actually have a program where it's required, now it doesn't always happen, but there's a requirement that you get with your loan officer and walk the house so that you can discuss those types of financings. But beyond that, I think the whole pre-qualification process in our industry has been very misunderstood. Our buyers should always be fully credit approved anymore, in my opinion, before any offer is written. You've heard the terms pre-qual, pre-qualifications, credit qualifications. You know, my thing is, know your lender. You know, are they basing their pre-qual letter on a phone conversation with the borrower? I can tell you that's trouble today. Are they pulling a credit report and having a conversation? That's trouble today. Are they meeting with the client and actually looking at documentation, pulling credit report, and putting it through a decision engine? Now we're getting pretty close to where you have a pretty good chance of having a legitimate borrow. But I will tell you, even today, probably the best thing you can do is have them go all the way through a full credit approval process. So we meet with them, we collect the documentation, we pull credit, we submit it to an underwriter to say, yes, this is a legitimate borrower. Because I can tell you today, lenders, we're scared to death. If you don't cross the T or dot an I, we buy the loan back. And so I will just tell you that, ask your lender, when you tell me this borrower is credit approved or pre-qual, what do you mean by that? Because that's where I see so many transactions blowing up. They'll say, well, I have a pre-qual letter. Well, you know, we got their W-2s and they didn't have income. So to me, we need to think first about having the borrower fully approved, understand the property, and then when you go down that path, the likelihood of it blowing up, it minimizes it. Now, we all know we still have appraisal issues and other issues. I mean, there's so many moving parts that can blow it up, but you don't want the borrower's credit blowing up. And that is a process. Slow down, take 3 or 4 days, and put them through the whole process. Encourage them to go through the process.
Right, good point.
Exactly what he was saying. Vetting out the buyers is probably one of the biggest issues. You know, we have a reason that deals fall out. I can tell you with GMAC Mortgage, it's required on a property that is available for financing in our REO inventory that they obtain a pre-approval with us. We take them all the way through to a conditional approval and not a pre-app. So I know when that buyer comes in, they're fully approved. If they're trying to get around doing a mandatory pre-qual and the buyer's refusing to, the asset manager going, you know, I need to see a full pre-app. Now, I understand if we're on a time, you know, Quater's ticking, they send everything out, you're trying to obtain a pre-qual, and that's where you guys get the pressing from your asset manager going, I need this offer in, I need this offer in, let's get it under contract, we want to close this month. So delaying them a few days and working, you know, really getting your asset manager to also understand the exact what you're trying to do and you're trying to put a solid deal together. Yeah, I can tell you it's one of our scorecards we look at all the time for our agent is escrow timelines. I find a lot of agents can get a deal under contract and a lot of agents can't help during the process and get a deal closed. Vetting out the buyer and the condition of the property are the 2 leading factors, I believe, to get it closed with what we're seeing.
So, help me out here. How many people in the room are agents or brokers? Okay, well, there we go. So, I'm going to kind of speak to financing from the broker perspective. And we're talking right now about partnering with our lenders. One of the number one questions that I'm asked is, you know, other than price, what can I do to get my offer accepted? Because in our market, multiple offers are a significant issue right now, declining inventory levels. Do y'all have that problem? I see mixed messages out there. You know, partnering with your loan originator in the right way is one of the key things you can do to get your offer accepted. And let me give you an example. We'll get an offer submitted to us and it'll have a pre-qual letter with it. In the pre-qual letter will say something like, you know what, if everything John told me is true, he probably qualifies for this loan, right? You know, that gets hard to sell to my client. Before they take that property off the market, they want to feel warm and fuzzy that it has a good chance of closing. So one way that you can partner effectively with your loan originator is to get effective pre-qual or pre-approval letters written. The buyer can authorize the originator to release their FICO score. They can. They don't. What's the big secret? If you are qualified, why not? What's your cash on hand? What's your length of employment? Those are effective statements that can help us get that offer accepted. So other than price, what can you do to get your offer accepted? Work with your originator to have a really effective story told on how strong your home buyer is and likely to close. Does that make sense? Right. So that's one way you can partner with your originator.
I agree with Mike absolutely. When we're looking at multiple offers internally as a servicer, and our account executives cover, they're not assigned, they're sort of cradle to grave. They don't cover just loans or just REO, so they cover both. And we absolutely take offers that might not be the best dollars, but maybe the best presentation with the most probability of closing all the time. So absolutely.
Makes sense. You know, what I see so often with agents is that, one, they get the loan officer involved way too late. I think we were talking earlier, and the loan officer should really be involved with the property prior to a borrower. I mean, we were talking that you make the loan officers walk the properties prior to finding a buyer for the property, so that they understand, they really partner with the agent prior to finding a buyer, right? The second thing that we find is that they'll get a pre-qual or a pre-approval, and they won't understand the conditions on it. I mean, I would get pre-approvals that would have stipulations on them that there was no way that the person could meet, but they would assume that they had a closed deal. So it's not only getting the pre-qual, but understanding, having a conversation with the loan officer and making sure that pre-qualification or that pre-approval can actually close. So I saw that a lot as an asset manager. The second thing, working with a loan officer that we would see is that they'd hand it off to the loan officer and expect that the loan officer would do the work for them, and they wouldn't follow up. It should really be a partnership between you and a loan officer. One of the things that when we invested in Sagamore is that we designed and developed processes for the REO market, and it involved partnering with the agents, doing their marketing for them, and generating buyers for them. I mean, there should be really more due diligence on the loan officers that you choose. I see that, well, that's enough on that, I guess. Any questions on that? Any comments? Yes?
The comment I have is, it's been very successful, and share with everybody, is that I have a note on the MLS stating, Wells Fargo, and I have, basically kind of worded like you can use this person or use whoever. And I partnered up, and I'm very close with my loan officer, and she's absolutely fabulous. And I hardly ever lose a deal. I don't work with buyers because it's a conflict of interest to me, because I just do the REO properties. But the agents have the opportunity when they go in and pull out all the documentation to right there. There it is, use this, or go use another Wells Fargo, whatever. And then they come in with, I don't take it off unless I get a pre-approval. I mean, what for? It's meaningless. So when the pre-approval gets actually put in with the offer, and I'm good to go. But to send an offer that there's no proof this buyer is legitimate is a waste of everybody's time.
Well, I agree. I don't understand why working with buyers is a conflict of interest. That doesn't.
Well, for me it is, because I have a very strong relationship with my seller, and when I'm dealing with wells and septics and all this kind of stuff, and I just feel I need to. It's hard to be 50-50 in a relationship, and I feel I can't be. I feel I'm 100% over here. I personally feel I can't give this person what I'm going to give my sellers.
Right.
So that's in my head, and that's the way I feel. So I don't.
I think you bring up a good point that I think the responsibility for the listing agents also. So we have a buyer's agent, and when we were talking about working with loan officers, that doesn't apply to buyer's agent. It applies to the listing agent, because what made me upset as an asset manager is that listing agent would take listings and just list them and forget about them, and then the offers, they would just be a pass-through and collect it, and they would accept no responsibility for the pre-approvals or the contracts that were coming from buyers agent. They would always pass it on. So if I could give you a tip as an asset manager to a listing agent,
Yes.
is that you need to make sure that you understand what you're submitting to me because,
Oh, yeah.
you know, it's your responsibility, it's your listing, and
Yes.
I would see that a lot. Yes, do you have a question, or does anyone have a comment here?
Yeah, thank you for the endorsement and commercial.
Yes. And thank you for the question,
Yes.
and comments.
To finish that off, ever since I put the package together and not just throw in an offer with not being complete, you know, my execution, 262 houses, listing price 99% for the MLS in 4
Nice.
years. And,
Good job.
and that happens from speed.
Right.
That happens from accuracy.
Right.
No lawsuits, none of that stuff. And that's because I give a full package. I will not submit a half a package. I can't. It's a waste of my asset manager's time.
Right.
Everybody's time, and then everybody's pissed off.
Right.
So, anyway, if that helps anybody.
Okay. Who had a question? Yes.
Well, I think as a REO listing agent, I can better serve my clients if I have a buyer that I know is pre-approved, has gone through the whole process. Because as a listing agent, when some of these offers come in, it's a nightmare. You see the pre-approval from clients, from companies you've never heard of before. And when you try and talk to the buyer's agents, they become resistant to any guidance. So, I mean, my closing ratio is much higher if I'm on both sides.
Right.
Because I do I feel I'm a much better agent, and I do a fully thorough job and address all the issues up front.
So in my counteroffers,
Right.
My asset manager, I'm lucky, they listen to me. So in the counteroffer is in there that the seller's agent has 100% communication with the lender of the buyer during the regarding the loan process. So
Right.
I actually, and the buyer's agent's aware of it, I actually am in communication at all times with the lender, all
Right.
the time. And because I put it into my counteroffer. So I control the lender even though I'm not representing the buyer.
Okay. Well,
So,
good comments. Let's we'll move
Yeah.
along, and I appreciate both your comments.
so-
So let's move along a little bit. Let's talk about the difference between a pre-qual and a pre-approval. I mean, we talked a little bit about it earlier among the panelists on how we'll get letters from unknown agents or unknown brokers. It'll just say, you know, based on what you said, this person will qualify. So you guys want to talk a little bit about the difference between a pre-qual and a pre-approval, and maybe some tips on what you should look for to make sure that you know that that's a good pre-qual.
So earlier I stated that there are various levels of this, and to the point where you're getting letters from companies you don't know and you don't know what it's saying. I mean, really, there's basic components to credit qualifying, right? We need to know that, first and foremost, we've seen a credit report and the lender understands their FICO, right? And you can ask that question. So if they don't show on there that a credit or tri-merge has been pulled, I think you have every right to push back. That's the first sign. The second thing would be, have they actually met with the lender and provided documentation? And again, I think you can, if you're just getting a form that says, yes, they're qualified, I would push back and say, tell me what that means. Have we pulled a credit report? Have we seen documentation? And then the last step is, has an underwriter looked at it? Or is this an electronic approval? We still have our engines where I can input data and push a button, doesn't approve, change the data a little, push a button, bingo, I have an approval, and I hand you the letter. So is it an electronic approval, or is an underwriter, a person actually looked at that file, reviewed the documentation, looked at the credit report, and the lender has said, this client's approved. Now you're still getting a condition subject to property appraisal, standard things like that. But I think it was Chris who said earlier, if you have a condition that says, subject to an income of $42,000, that tells me no one's seen a W-2 or a pay stub or talked about their work history. So I think you have every right to tear that whatever you call it, whatever they're giving you, apart. Now I know in a lot of states now they actually have forms where there's boxes. Credit report, it lists these things I just listed. But I also know that a lot of lenders don't use them. So I think you have every right, as representing your seller, to say, explain to me what your piece of paper here means, if it doesn't already do that.
He hit it pretty much. I think what I could add maybe from the asset manager side is the financing contingencies, day 15 or whatever contracts you're looking at, if they have conditions and you following up to make sure is the appraisal order, is the appraisal in and has the conditions been met 15 days into the contract or whatever is specified that you guys agreed upon, will go a long ways. Pushing it along, and the dates are in there, and I mean, I could say for our writers and our contracts, it's required you notify the seller and release the contingencies. I think if you have a full pre-app up front, pre-approval, it's gone through underwriting, which it will with GMAC Mortgage, that date's pretty much done day one. I mean, the conditions can get met, get everything into underwriting, and making sure that you're asking them, are all these items in? Has everything been checked off? Now we're just finishing up condition, and are we getting ready for closing?
So who wants to go home after this week and grow your business? Anybody in the room? So, if you're like me, you're kind of here and you want to learn and you want to grow your business, and how do you make those two things go together? So, Chris was an asset manager at Fannie Mae. So Chris, we'll just role play here a little bit. If you're my asset manager at Fannie Mae, and when I send you offers, they have a pre-qual or pre-approval letter. Sometimes it's hard to tell what the difference is.
Right.
And in that, you've got a FICO score, you've got income, you've got length of time on the job, and you've got cash on hand.
Right.
Does it give you a sense of strength for the offer?
Absolutely. And so,
what's your opinion of me as your broker?
Absolutely. So I agree with you that you should have a narrative trying to explain the strength of your borrower. What is included in it, the more you can include, and you can write the narrative so that the person on the other end reviewing that, the stronger your offer will be. I saw so many people that would submit offers that look a lot alike, and I couldn't understand what was going on. Then I turned one down, and then I would get the story. And I think exactly what you're saying is that if you can have a narrative explaining the strength of your borrower, one, I will respect you more as a professional that understands what you're talking about, and two, you'll have a much better chance of getting that over a similar offer that was submitted that I had no clue what was going on. Because if you don't write the narrative, I'm just going to guess, and when it comes over on Trax or whatever database you're using, I'm just going to go with my gut, and it's very difficult to transfer anything without a narrative. But I think that's a great point, by the way.
So as agents, we have two different roads. If we're representing the buyer, then we're working with the buyer and that lender. And if we're on the listing side, then I'm getting judged by Chris on the quality of offers that I send to him, but not necessarily my buyer, and I didn't have anything to do with the lender. So I'm processing what I've been handed. So on the buyer side, we talk a lot about having a good lending partner, a good loan originator that you work with. But what's good? I mean, the guy that brings donuts every Tuesday morning, is that good? Yes. The guy that you like or you go to church with or lives in your neighborhood because he's personable or she knows has a lot of different products, is that what makes them good? I'll tell you how we make that decision. It's a little bit like this. Do you make my job easier? Do you close your deals? Do you give me the information I need? Do you tell that home buyer why they need to give that information and authorize it to be released? Can you help me convince that home buyer to do that? To me, that's good. What else is good? We support those who support us. So one way you can grow your business is directing your business to Wells Fargo, for example. Wells Fargo is a client. We work with Wells Fargo. They support us, so we support them. Right? So if you want to grow your business, that's another way to do it. As the listing agent on a transaction, it's incumbent upon us to convince the other agent, the loan originator, and that buyer why it's to their benefit to release the information. What's the secret? Why do we get these pre-qual letters that are 1 or 2 sentences? What don't they want us to know? So as a listing agent, what you'll hear from Chris, I think, was when he was at Fannie Mae, that's what makes a good listing agent. I mean, everybody's got to get the property sold, right? I mean, that's important. You've got to complete your task, you've got to hit your timeline, but what other value are you adding to the transaction? Do you have the ability to convince the other parties to the transaction to give you the information you need to get Chris comfortable with the offer that's been submitted? Because if he accepts that offer and it doesn't close, he's got an aged asset on his hand,
Exactly.
right?
Right.
So that's how we go about choosing our lending partners. That's our definition of good, and do they support us?
Absolutely good.
And I agree. We actually have preferred lenders that we do require pre-approvals to come in with. It doesn't mean they have to go with that financing, and obviously plenty of institutions do this. And it's no different than you working with the loan officer next door, down the street, or in your neighborhood, that you trust that every application that they get the information necessary to give you a good letter, a good decision, and a buyer that can close on their offer.
Great. Great comments. Yes.
Hey, Chris. Hey, man.
Yes. What was your name? Who you with?
Philip Baroda from Los Angeles. One
Should
of
be
the
asking
things that
all.
we have in LA's, and I think it's probably nationwide, is we've got these RESPA violations that you can't, force someone to use a lender. Now,
Right.
when, like the panel was stating that, you get these pre-qual letters that are worthless, and then you want them, like the last gentleman mentioned, at least go ahead and double lap with someone that we know and trust and have a relationship
Right.
with, that they don't have to use that person.
Right.
But we want to know but the problem also that buyers are facing and the brokers, always say, and to a point they have a little bit of water to stand on, is it does hurt their FICO scores when there's too many inquiries,
Right.
And how do you, typically the panel or Matt, combat that, when in fact, it is true.
We're going to hit on one point.
Yeah,
I want to hit on one point right out of the gate. Pulling a FICO within 30 days by multiple lenders will not affect the FICO.
That's what I think.
Everyone thinks out there that's true. It just isn't true. We know who the pulls are. You recognize that should not. Now, if they go out and have 10 people pull it over 3 months, you got a problem. But if you're talking about one lender versus another, it should not affect FICO. I know at Wells it doesn't.
Yeah, it does, and that's what we inform everyone.
Well, if
If you get pushback, and that's you educating the buyer of, that it's not going to hurt. Now, you're still going to have some that won't believe you because we all know a lot of times it's a secret how all of it works.
Right.
It is a secret.
Yeah.
Well, you can go to the credit agencies and they'll do a rapid rescore if you tell them that that is the case, and they'll take that off. Right.
And we do, but this is what we're dealing with a selling agent when they're presenting an offer. This is their buyers, especially if they're coming with a pre-qual or pre-approval from a direct lender that is a reputable one, like a GMAC, BofA, Wells, whatever. But still we want to know, because you're right. There's so many times that you do get a pre-approval letter, and then somewhere down the road during the deal, there's a condition or something that pops up that shouldn't have. That's what I'm saying.
I can tell you that you're right, RESPA violations, I'm not allowed to tell them what lender to use, but I don't think that absolves you from making suggestions. I see so many people who use that as a crutch that, hey, it's RESPA, I'm not even going to make a suggestion on what loan officer to use. And what I think that does is I think it weakens you as a real estate professional from not establishing a professional relationship with a solid loan officer in making suggestions. Now, how many times are they going to listen to you as a trusted real estate professional? I believe more often than not, but you can't twist their arm, right? But there's so many benefits to having a solid relationship with a good professional loan officer that you need to seek. You need to seek one out, and you need to establish it, and then you need to hold them to certain professional standards. And like the panel said, standards that support you in growing your business, whether that is marketing, whether that is product knowledge, things that can help you grow your business, because you're certainly going to help them grow their business. But don't use that as a crutch. Make sure that you use it, you develop the relations to support, and then work within RESPA guidelines. 1 second, we had a background. What's your name and who are you with?
Dallas, Texas.
Welcome.
Just sharing a tip, what we have incorporated into our processes is right up front, when buyers are eager to get the deal, we actually have a form in the middle of the form that basically says that the buyer gives the seller, the listing agent, permission to contact their lender, and the lender will cooperate with
Exactly. We try to get it signed on every single deal, just because it's better for you to be in touch with the LO and know exactly what's going on. I can just tell you, just from talking to buyers and the great experiences, when the LO and your office are working hand in hand together, they pick up the phone, they're not real happy about having to do another pre-qual. They think, pulling the credit again, you try to talk them out of that, and they're going, I don't want to do this, I already have a pre-approval, I've gone down this path. But then they call your lender up and you're working hand in hand with them. Systems have been set up, everything's in place, they know the condition of the property. The second you call them up, congratulations, Mr. and Mrs. Smith, heard you put an offer in on the property, great front entry, whatever it is, they know the product already. They're on board with you, they know the condition. We're going to run into this, they can set their rate locks appropriately and work with you to do so. So, you know, these are all things your buyer's going to walk away a lot happier, you're going to walk away a lot happier, and it's all because you're working hand in hand with your LO.
Yeah.
Right, yes.
Yeah, in some
Your name and
cases,
who you with?
I'm Debbie Mells from Newport News, Virginia.
Well,
I
welcome.
apologize, I have laryngitis.
We can hear you just fine.
Thank you. We work with 4 or 5 preferred lenders at our office.
Right.
In a lot of cases, we'll get a contract where we don't recognize that lender. And we actually can come out looking like the hero when we tell that buyer's agent, listen, why don't you have your client go through one of our preferred lenders and save them quite a bit of money.
Right.
So there's a lot of things you can do. In addition to, you know, we have a list of certain specific questions that we can ask the lender without them disclosing any confidential information
Right.
about that buyer to see how strong that letter is.
Right. I think it's important. I think one of the takeaways that you should take away is, right?
It works.
I had that written down.
Along with
Anyways, is that, you know, we're all professionals, and it's your responsibility to have product knowledge on the mortgage side. I mean, that is a huge part of your business, and I see so many agents who just pass that off onto a loan officer. Oh, he's a loan officer, he knows what he's talking about. But that's your responsibility as a professional in any industry to know your industry inside and out, and you need to be responsible. We can take this to the panel on product knowledge and what's responsible, but that's a huge part, and you should be interested in the mortgage side. And when we wrap up, I'll tell you what's actually going on in the mortgage space and how exciting it is to be in the mortgage space right now. But you've got to get involved, you've got to understand the products, and you've got to meet with your loan officers so that you can intelligently guide your customers through the process. And the mortgage side of the process is a huge side of the process. So, do anyone want to talk about product knowledge and how important it is to
Sure. So REO is a big part of every marketplace, right? All right, so we've got to get some new tools. We've got to acquire some new skills if we're going to play in that area, because it's a different product than what we've all been used to for the past period of time in our careers. So Fannie Mae's a big player in REO. Can you speak effectively to the home path financing program? Can you right now, and can you explain to your home buyer what the benefits to home path financing are? If you can't, that's the first thing you've got to do is get skilled up in that product. Can you speak to HUD's program? HUD's the largest seller of real estate, residential real estate in the world. Can you explain to a home buyer the meaning of insured, uninsured, insured with escrow, so that they walk away from that conversation with you understanding it? Can you explain to your home buyer or to another agent, if you're the listing broker, we spend an enormous amount of time with this, the difference between FHA 203B, 203K. Are you, as a real estate professional, writing realistic contracts? Are you writing 203 contracts with 30-day close periods? So these are the new skills that we've got to acquire that make us good. And this is how we grow our business. When we deal with Chris when he's at Fannie Mae and we understand all these products and we can speak to them, that's what they think is good. And that makes them want to work with us more. So the first thing that's incumbent upon us is to get skilled up in these products. And I don't know about each of you, but I'm not a financing expert. When it comes to the mortgage process with my transactions, I don't need to be the guy that knows everything. I need a good, strong lending partner that does and can speak to them and can help me be educated.
Let me just tag on to that. You know, knowledge is power. And, you know, you want to build a relationship with your client. You need to know the stuff. And to your point, though, you don't need to be the expert. You don't need to know the DTI qualifying ratios on every program. But you need to be able to speak the language. And I think Chris said earlier, you want to work with a lender that is giving back to you. So if you need training, go to your lender and ask for training. I can tell you right now, we have 1,000 different training modules that we push our people out to the streets every day saying, go get in front of the realtors. Now, you know, how successful, I don't know we are at that, but at the end of the day, you know, a good lender will work with you to grow your business, not just to take your business. And part of that is education and understanding the products. And things are changing so rapidly. I mean, we see 10 to 15 product changes a week right now. And it's slowed down. So we don't expect you to know everything, but to your point, do you know what HomePath is? What's the difference between a 203B and 203K? So just general knowledge, and it is power, and your customers will appreciate that. And it'll save you, it will help you close more loans, more homes successfully in the end.
These guys have talked about a lot about the underwriting, qualifying your buyer, vetting them up front. I think one thing that we really look for is understanding the products and what it's going to take to, if you're going in, what repairs are going to be required to call it out on the appraisal. Everyone knows the appraisal market's changing right now, and I mean, I just cannot believe the things that are coming across. The new C requirements with conventional loans with Fannie. You know, it's almost hard to get a conventional deal done right now in condition than it is an FHA. But FHA's got to be on C5 condition and C4 on a conventional. That's a big hurdle. Your asset managers are just now realizing that. I see it every day. I mean, buyer's qualified, property doesn't, you know, and this is a great property. I could go live in it today. What's showing up on those, and you knowing what's, you know, continually is going to show up and trying to get out ahead of that is what will help close the deal with your mortgage group. They're also not knowing what's showing up, and sometimes things are showing up and you're like, okay, can we get this way? All right, that's probably your first thing. Or, you know, you go to your asset manager, what do you want to do? You want to split the cost, repair it, can we give credit? What's the correct path I should go right now? Just, if you will, up front on your BPO and ahead of time, take a list of FHA items, go through the property, write out a completely separate from your BPO. I talk a lot about the narrative part and drawing a picture for your asset manager on your BPOs, but I rarely see the picture being drawn to the mortgage product and saying exactly this is what it's going to take to get this mortgage. Instead, we find buyers, we let them all flood in, offer, we accept the property, now let's go figure out how to get the house to work for this offer instead of the other way around. It does reduce your buyer pool, no doubt about it. That's your job to figure out how to find more buyers, where you're marketing, so on and so forth. But that is my #1 hurdle I'm probably dealing with on the mortgage side right now is condition and what's changing so quickly with these appraisals. Getting, you know, and educating your buyer in front of why it's going on. It might not also be the lender. It might be with these new conventional products. You know, 95% out there right now in conventional deals with MI on the back. It's the MI's underwriting that's requiring it. It's not the lender. So ask the question to them. Who's requiring this? Can we get it weighed? Is it your underwriting department, or is it, you know, is it one of the big MI companies that's saying, no, I want the inspections. They see, you know, a pool's not working on there. They're also wanting pool inspection now. Well, can't I just have it blue and running? You know, that'll work for my mortgage company. It's not going to work for the MI group. And you're seeing, you know, mold. I want a mold test up front. Well, we see the mold. We'll get it cleaned and you know, tested afterwards. And they're requiring this, even though, you know, it's a small little, and we know exactly what it was. It was in the laundry room. It's underneath the box. You know, they pulled it away and you got a little mold on the wall. Less than 100 square feet, but they want all the testing now. Setting your buyer up for that and knowing what might come up ahead of time and educating them is where you guys can, you know, it'll really help you to shine with your asset managers.
All right, well, we've got about 5 minutes, so we'll wrap it up. Did anyone have any questions? We're in booth 121, and you guys can tell you what, I don't know if anyone else is exhibiting here. You can come by our booth, and we'll talk about mortgages all day. I love it, right? I'm a finance guy. I don't know if that makes me a nerd or not. It certainly has not worked out in 2006 and 7, but it's not been better than that. So we'll wrap up. I'll start. So it's an exciting time to be in the industry that you are in, real estate. We've been through a tumultuous time, but I think things are starting to head in the right direction and start to come up. In the mortgage industry, you're talking about debt written on residential real estate in the United States, which I think is very secure, especially if you look around the world. The government has made it very clear that they're exiting this space, but debt written, as I said, on residential real estate, I think is a great investment, and we'll see more players come into the space. How many were in my speech yesterday on residential real estate funds? Did anybody see that? Only 1, 2? Oh, that's it. No, I'm just kidding.
3.
But that's where the market is going. So we also have a hard money fund as well, and you're seeing a lot of money coming back into this space. So stay tuned is what my advice to you, and get involved in it, because products will be coming in and failing and winning, and get involved with your mortgage partner and get curious, and you're going to do great. I mean, you've persevered if you're at this conference long enough, and we see nobody can say whether the recovery will be 1 or 2 years, but we can all agree in about 5 to 7 years, everything's going to be golden. So it's a great time to be in the industry. You'll see a lot of great things happening in the industry, and that's all I've got. I hope I didn't pick up the whole 5 minutes. Do you want to wrap up? Go ahead.
No, absolutely. So just make sure you know your asset, make sure you know your market, and make sure you know your product. And speaking of what they were saying before, we are very low level at BSI and dealing with our realtors and the homeowners when there's borrowers, houses when it's just a house. But nothing bothers me more than when I ask a realtor what the FHA loan limit is for that property and they don't know.
Right.
Our relationship will probably not go very well the rest of the way.
Right.
Because when I'm listed at 315 and the FHA limit's $300,000,
Right.
I need to know that. That has a tremendous impact on it, right? I can know a lot, but I can't know everything. Local realtor, we're being an expert in selling the house. Now, you're not the loan officer, but you need to know where your house falls in your market. So I would say there's probably not too much you can know. You definitely don't want to do too much in the transaction because you won't be able to scale it up. But make sure you know what you do. And make sure you're we call them account executives. We deal with homeowners a lot. An asset manager sounds a little too much like I'm trying to sell your house. And make sure your account executive knows that you know what you're doing.
Great, thank you very much.
So, as a fellow broker, see the disconnect? That what we think is good and what they think is good. I mean, we all get plaques. We all have plenty of plaques on our wall, right? We're all good.
Certified.
But what they think is good and what we think is good is disconnected. So if you want to grow your REO business, this is one way to do it. Differentiate yourself. Be an expert on all the different types of financing programs that are out there. Be able to speak to them. And when you submit offers and interact with your asset managers, get out in front of this stuff. It will differentiate you, and that is a strong way to grow your business.
Absolutely, thank you very much.
Exactly what he said. A narrative to your asset managers on the offer. Know what's going on. I know, try to keep it the same every single time. When you send an offer in buyer 1, buyer 2, this is what's going on, and drawing the complete picture for them. And that you're knowledgeable, not just throwing it up against the wall and see if it'll stick and figure out how to get it to work in escrow.
Thank you.
Thank you.
I'm just glad I didn't fall off the stage. So, you know, to me, this is all about a team approach. And I've been around this industry about 35 years now. It's always amazed me how we like to be so independent. And so I would encourage every one of you to build a team of professionals around you. I mean, we have a lot of moving parts. You've got lenders, you've got the realtors, buyers, seller side, there's appraisers. Build a team and represent yourself as a professional team.